Now, when it comes to a 401k plan, some of the investments are horrible. I have seen some target date funds that are absolutely horrible, or you have a super limited ability to buy anything but mutual funds. There are a lot of plans out there. And of course, you can invest better outside of the company 401k. For a lot of individuals, this is where I say do your own research. You have to know what is offered by your 401k plan. You also have to know exactly what it looks like, where a traditional IRA or a Roth IRA might be a better option as an investment vehicle because of that growth factor versus that 401k. Now, even though you can put a lot more money into the 401k, if it's invested in something that it really doesn't grow, or you're not seeing the growth that you need to get ready for retirement, again, that IRA option might be a big one. Now, when it comes to IRAs, I cannot say this, number 4, saving big with a Roth. When it comes to a 401k and a Roth, I like the Roth variation in its entirety. I do the same when it comes to my 401k plan. I personally put everything in the Roth. When it comes to my IRA, I put everything in the Roth. The reason being, there is no point when you add in the growth factor, unless you're already in retirement or very close to retirement, that you're not going to see more of a return from the Roth by paying the taxes up front. Almost any tax bracket that you really break this out. So let's say, for instance, from 25 to 40, you're in a higher tax bracket. You're in a 24% tax bracket. Chances are when you get to retirement, you might not be in that 24% tax bracket. The bracket you're falling might be a little bit lower. However, when you start adding in 20 to 25 years of the compounding growth that we're seeing with these 401k plans and with these IRAs, the numbers get so astronomically high when you start getting all of the compounding, when you start getting into the higher dollar figures. Now you have to pay tax on everything. If you are in a traditional plan, if you are in a traditional IRA or a 401k, you now have to pay tax and take required minimum distributions on everything you have in there, which of course includes that 25 years of growth before you got into retirement. Also is going to include while the money grows the next 20 to 25 years into retirement until you pass away, which estimated 89 years old, 90 years old where people are living to. It's kind of crazy to think, but again, putting it into the Roth variation, paying the taxes upfront today to have that free growth and really freedom with your money when it gets into retirement does make a big difference. Always, always, again, as a financial counselor, I always offer and really recommend doing that Roth option.